I'm going to be giving you the simplest method I've been using to effectively test my strategy. Same method that we use in our free community as well to help Alex make £215 simply by copy and pasting trades. Darius £106, £1,100 made in 1 day for Alex. £158 made on one trade from JS, £224 on profit for the day. It doesn't take too much time to process. It's very simple and straightforward. I'm going to lay down everything for you to make it as understandable as possible. Let's get straight into it. Okay, so we have our two main methods. Step one being your chart setup. So all you gotta do is pick one pair, one time frame, go back 3 to 6 months, turn off any replay spoilers because you don't want to be cheating. At the end of the day, you're testing it, so there's no point in cheating. And only move candle to candle. You're not testing a strategy, you're testing your eyes to see how the markets behave. You know, for the longevity of your trading journey, you want to understand how the market moves and how the market behaves, how the market reacts to certain things. So being able to identify, you know, what moves the market this way or why the market moves this way, using this chart setup will allow you to get the most output possible in the shortest amount of time. It's very simple. Pick one pair, one time frame. For example, you can pick gold, pick the 5-minute time frame, go back 3 to 6 months, and then test it candle to candle. Now, step 2 and 3, this is what we actually want to apply. So we want to look at structure and liquidity. Structure being our higher highs and our higher lows, which is our bearish structure. Lower highs and lower lows, which is our bearish structure. Mark every single TBOS. A TBOS is simply an area and price where it tells us where we actually have our break of structure. I have a video on this covering everything about TBOS and proper market structure, so make sure you check that out. But yeah, mark every single TBOS you see, mark where it came from, mark how the TBOS occurred and the times it occurred. Ask yourself, was this the real direction or was it manipulation? And analyze the time that the break happened, because we always want to be getting in after the manipulation move. We don't want to get stopped out by the banks. We want to be following what the banks are doing. So we want to always wait for the manipulation to happen before we get in, because this is when we realize that this is the true direction of the market and this is where the market actually wants to go. So after TBOS, we use this to identify where the market actually wants to go. Now, step 3, liquidity. Mark equal highs and lows that we have. Mark clean support and resistance. Ask, was it swept? Did it hold? Take screenshots and build a library of liquidity traps. Every time you see a equal highs and equal lows being created, mark how, mark when, mark why. Mark our support and resistance areas as well. So this kind of applies the same concepts to equal highs and lows. Mark out our support and resistance areas. Ask yourself, was it swept? When was it swept? Did it hold? How long did it hold for? Take screenshots, get as many data collected as possible. You know, the more screenshots and the more data you have, the better it's going to be for you down the line in your journey. Now, step 4, your sessions and your timings. Mark down London, New York, and Asia. I've made a video on the indicators you can use that will help you to highlight your Asia session, your London and your NY sessions, highlighting the most liquid times. So make sure you check that out. It's very useful. It basically gives you a preset on timings for Asia, London, and NY. Mark out Q1 to Q4 as well. This, if you don't know what this is as well, I've linked it into another video completely covering the full indicator, marking out Q1 to Q4, how it works, why it's so powerful. So mark out London, NY, and Asia. Mark out Q1 to Q4. This is our accumulation, manipulation, distribution, and our rebalance. And log session behavior. Log what's happening during each session. What times does it happen during each session, and note down why do you think it's happening. You're never wrong. At the end of the day, you're going to be getting more experience as you go on. So note down why you think this is happening and, you know, apply this to the charts. Ask yourself, did the setup form during we were manipulating, so usually during Q2 and Q3? Did the reversal happen in Q4 or Q3? Always note this down, so you always, because the more data you note down, you'll be able to, you know, identify trends on your live trading, and this will give you a big, much bigger edge in trading. So instead of having to guess all the time, you're actually looking at the charts and you're able to, like, you know, tell yourself, I've seen this before, like I know what's going to happen. And also note down which session usually delivers the most wins. This way you're able to identify which session has the most high probability trading times. So you can stick to this session instead of trading all of them and trading too much, over trading. Stick to one session, know down which session is the best for your own strategy, and stick to trading the session only. Now step 5 and step 6, your POYs and your trade recording. So step 5, POYs. Know down what created the POY. Did the POY come from support and resistance? Did the POY come from manipulation? Did the POY come from a fair value gap? Did the POY come from a liquidity sweep that happened in Q1 or Q2? Note down what created the POY. It helps you a lot to be able to identify high probability POYs. So when you see a setup form and you see this certain price movement happening, you'll be able to tell yourself, well, I've seen this before, and I know that this usually works. I've seen this before and I know this usually doesn't work, so I'm not going to take it, or I'm going to take it. So ask yourself, does price return to the POY? Does price return back to the order block or the fair value gap or the breaker block? Did you have a TBOS after the POY got mitigated? So if you mitigated the fair value gap or the order block, did you have a TBOS occur, or did price deliver, or did it fail? Ask yourself as well, did it occur during correct timing? Did you have a manipulation beforehand? Now step 6, log in all of your trades. You want to log the day that happened, so what day it was, Monday, Tuesday, Wednesday, Thursday, or Friday. Log which session, screenshot this as well. Give your reason for entry, give your your result in terms of your win to loss, and your RR. Give yourself notes on your execution. This way you're able to build a whole book of data. So when you're live trading and you're seeing these things occur, you're seeing this setup occur, you're seeing this manipulation, you're seeing this happen at this time frame, then you have a much more clearer mind and a much more clearer vision on what's happening. So you have a lot more confidence going into the market, or you'll be able to tell yourself, I'm just going to sell out today. It doesn't look good, this usually doesn't work, so I'm going to sell, I'm going to preserve my capital. Or you see it and you tell yourself, well, I've seen this before, this usually works, it's very high probability, let me take the risk. So having a lot of data collected is very, very crucial for your journey, because it allows you to be able to have a lot more confidence going into the markets and knowing the best moves and knowing the best timings, the best dates, the best sessions, and the most high probable times to take a trade. Now, the backtesting framework working together. Backtesting works because it forces you how to see structure, liquidity, sessions, and POYs actually form in real time. This way you're not guessing, you're not just saying, oh, this happened because of this. Like, you're not actually guessing, like, you have a reason behind everything. So you have a lot more conviction going into the market. You feel a lot more confident. So when you go candle by candle, you stop daydreaming about perfect entries and you start to see the real rhythm of price. Most people, when they see something happen in the markets, they just guess. They don't really know what's going on. They just say, oh yeah, this is happening, I'm just going to enter. This is happening, I'm going to enter. It causes a lot of FOMO, over trading, and you don't really know what you're doing. So it causes you to be in a loss in the long run. But having a lot of data collected allows you to be able to know, okay, cool, this usually works, this doesn't usually work, so I'm going to stay out. And it allows you to conserve a lot of your capital and only enter in the highest probability times. You're not here to prove anything, you're here to gather evidence. At the end of the day, if you want to take this as serious as possible, you want to know absolutely everything about it, you want to master it, you want to know the ins and outs of it. So gathering as much information about possible is the only way you're going to succeed, and the only way you're going to keep longevity in the trading space. Over weeks you start to understand and recognize the same behaviors over and over again. Giving yourself that repetition, you're forcing your brain to adapt to the markets and adapt to how the market moves and where price reacts from. So when structure breaks cleanly, liquidity traps form, which sessions deliver the best setups, and which POYs actually react, you'll be able to trade less, take much more higher probability setups. This is where the entire framework comes together now. So this is the whole flow of it. So you structure, identify your structure first, then liquidity, sessions, POYs, and then your entry, and how high probability or how low probability is the entry. It's very simple. So structure prints price, liquidity builds price, session behavior usually confirms, so either Asia, London, and New York. The behavior in which session usually confirms what price wants to do. Our POY forms, we have a TBOS giving us our true break, allowing us to know if this setup is actually very high probability. Then you have our entry and you journal, and you just repeat and you track, repeat and you track. Lots and lots of repetitions. I can't stress enough how much this is going to be so valuable to your trading journey. Trust me, the more you do it, the more you're going to know about the markets, the more you're going to learn about the markets, the much more confident and the much more clearer you're going to see how the market moves. And it's gonna benefit you in the long run. You're gonna have a much more higher win rate, you're gonna feel much more confident. And now probably the most important part of the video, results of psychology. This is one thing a lot of people usually struggle with, psychology. So I'm gonna run you through how you can fix this. So step 7, analyze your results. Analyze your win rate, your best setups and your worst setups, the best session and the worst sessions, and the TBOS, improve your accuracy. This way you're able to lay out everything on the table, proper analyze it. Look, well, okay, this setup gave me the best win rate, this one gave me the best win rate, this one didn't really have a good win rate, I'm going to leave this one had the highest RR, the best win rate, okay, I'm going to double down on this one. That way you're able to stick to one thing and master it. The best and the worst sessions as well. This way you're able to identify, okay, cool, Asia didn't do that well for my strategy, so I'm going to stop trading in Asia. NY wasn't the best, London was the best, so I'm going to stick to trading in London only. If a setup forms for an NY or Asia, I'm not going to take it because I have enough data to tell myself that it's low probability during Asia and New York. You understand? Cool. Now, and also the TBOS, improve accuracy. One thing I might tell you is, for me, TBOS definitely improved my accuracy because it meant that I was only entering when I actually had a proper confirmation to show that price wants to go in the direction that I want to trade in. That way, I'm not just entering blindly and my stop loss is not getting absolutely hunted. I'm only entering when there's good confirmations to tell me that price does want to go in the intended direction. Now, your psychology. Don't skip your losses. Your losses are probably the most important part of it because your losses actually tell you what's going wrong, why it's going wrong, and why you should avoid it. That way, if you see a setup form and in the past you've seen that this setup usually gives you a loss, you're able to avoid it and avoid taking the trade, meaning you're able to conserve your capital and protect yourself from hitting stop losses over and over again. So don't skip your losses. Like, it looks bad to see a loss, like everybody knows it doesn't look nice seeing a loss, but at the end of the day, the losses is what's going to teach you the most, more than your wins. Your losses are going to teach you a lot more than your wins will definitely teach you down the line. As well, don't cheat yourself. There's no point cheating yourself. At the end of the day, nobody's staring down and breathing down your neck. It's just you and the charts. Take everything, be authentic with yourself. There's no point cheating. You're only going to be cheating yourself down the line. Note down everything. Note down every single detail. Don't be skipping out stuff and missing out stuff. You're only going to harm yourself and harm your trading journey. Don't change your rules in the test. Stay to the same rules, stick to your strategy, stick to your plan, be consistent, and do it for a long period of time. Journal your emotions as well. When you're entering a trade, when you're about to exit a trade, journal how you feel, the emotions you're feeling. That way you're able to work on your emotions, you're able to work on, if for example, price is going close to your stop loss, and you might be feeling a bit anxious. If you journal this, price reverses, hits your take profit, you'll be able to identify that, well, usually when price reverses and it's going near my stop loss, but so and so lines up, price will usually hit take profit. So from now on, I'm going to stop being anxious. I'm going to stay much more disciplined and stay a lot more confident when I'm in a trade. Now, here we're building discipline. Don't use your real money to backtest. You're going to waste a lot of money. Here, we're just trying to build discipline, trying to collect data. We're trying to learn as much as possible as we can in the market. So just know you're going to be losing a lot of trades, but this is completely fine. It's all part of the journey and it's very crucial in your backtesting journey. So make sure you don't risk any of your real money. Open yourself a demo account, trade on it, journal everything. Don't cheat, don't skip losses. It's very simple. It takes you a couple hours a day, collect a lot of data, keep consistent with it, and you'll be profitable in no time.